Hello and welcome to another episode of Coffee Colombiana's podcast. Today, we are going to talk about Grupo Nutresa, one of the most representative Colombian multinational companies, an undisputed leader in the food processing industry with a strong brand portfolio that has had an improved performance during the current COVID-19 pandemic. In this podcast, Daniel Duarte, our equity analyst in charge of Nutresas coverage, will explain some of the most important aspects taken into account on his initialization report. These topics include the general historic performance of the company, the changes in performance that have taken place because of COVID-19, the growth strategy of the company, and the feasibility of the growth forecast he's made in order to obtain a fair equity value for this company. Hi, Daniel, and thank you for being with us today. Tell us about Nutresa's performance during the last couple of years.
Hi, Maria Victoria, and thanks. With respect to your question, yes, Nutresa's top-line performance actually has been exceptional. The company has grown at a compound annual growth rate of 9% from 2015 to 2020, and this is mainly driven by its operations in Colombia, but also by other factors such as a strong US dollar and its acquisition program. And in fact, at least one-third of top-line year-over-year growth has been explained or achieved via acquisitions. And if you start looking at profitability, revenue growth was not met via improving operational margins. So what I'm trying to say here is that some of the acquisitions that Nutresa has made over the years, well, some of those acquisitions have been dilutive to margins. Also, it's very important to point out that the good consumption performance in 2019 in Colombia was reflected in increasing volume sales in Nutresa as well, especially in the first three quarters of 2019, which allowed the company to keep prices constant during 2019 without affecting top-line growth, Maria Victoria.
Okay, and how was this performance affected because of COVID-19? And what kind of normalization are you expecting?
This is a great question, Maria Victoria. And the truth is that Nutresa has been one of the few companies that has shown a resilient behavior during this pandemic, this crisis that we're living. And in fact, the company has grown by about 15% in terms of sales during the first 6 months of 2020, while EBITDA grew at a faster pace. And of course, this growth that I'm telling you is also the effect of the acquisitions made in 2019. In this case, the acquisitions of Atlantic Food Service and Cameron's Coffee. But also, this growth was driven by the high demand for staple food products, which they represent about 43% of total sales for Nutresa. In our view, the outstanding performance of these products more than offset the contraction of the retail food segment, which was mainly impacted by the closure of restaurants, where the operation has been limited to deliveries. Here, it's very important to mention, Maria Victoria, that one of Nutresa's main competitive advantage is its solid product brand portfolio. Most of Nutresa's brands are well positioned domestically and in some cases are the number one product in its divisions. And as a second factor, consumer preference and strong brand management play a big role in this outcome, as Colombians are more inclined to purchase local and cheaper brands than international products.
Okay, and now what can you tell us about the company's growth strategy? Do you expect this to be the case in the future?
Yes, so as I mentioned before, acquisitions are very important for Nutresa. The company has predominantly made acquisitions in Central America and the United States, along with successful transactions involving partnerships and joint ventures in South America. Also, management has not hidden its interest in keeping acquiring businesses in the food processing segment. In fact, expanding through acquisitions is a well-known long-term policy for Nutresa, as we all know. The company is constantly looking for potential targets to leverage growth and reach its ambitious revenue goals. And some of the examples are the acquisitions of El Corral, Maria Victoria, Tresmonte, Lucchetti as well, which this company was acquired in 2013 with a multiple EBITDA of 12 times. And more recently, we saw the acquisition of Atlantic Food Service, as I mentioned before, and Cameron's Coffee, which has boosted its coffee sales. Also, following these acquisitions of Cameron's Coffee, well, United States has become the second most important region for Nutresa. And lastly, and to answer the second part of your question, in our view, the company will continue its expansion strategy. We believe that Nutresa still has ample space to make potential acquisitions, given the current net debt to EBITDA ratio of to 0.17. And with respect to products, we believe that Nutresa will enter new, healthier business lines such as organic food into the future.
What about the investing and growth assumptions of your valuation?
Okay, perfect. On our valuation model, we're assuming an 8% compound annual growth rate in the next 5 years. And knowing Nutresa is not a high growth early stage company, we don't expect Nutresa to grow at rates above the economy in nominal terms. Instead, we're estimating a sustainable rate aligned with the potential GDP growth of Colombia. In terms of investments, if the market conditions are suitable, the company will definitely continue growing both organically as they're doing right now with the announcement, for example, of a new production plan, and of course also inorganically. And we try to incorporate both factors into our evaluation model.
And to conclude, what equity evaluation method did you use? Were there any special considerations you want to mention?
Yes, so we value Nutresa's food business on a DCF approach. We discounted cash flows assuming an appropriate discount rate and Nutresa's portfolio. And when I say Nutresa's portfolio, I really mean Nutresa's current stake in Grupo Argos and Grupo Sura. That specific portfolio was valued at market prices in our model. So freely available cash flows to all providers of capital are considered after accounting for all necessary reinvestments. And in addition to this, we also perform a relative valuation, and to remove certain subjective assumptions, we also calculated terminal value by using the exit multiple approach. So in this case, multiples were calculated from a trading comps analysis.
Well, Daniel, once again, thanks for sharing with us this analysis. And thank you all, and remember to join us on Spotify, download the podcast, and leave a rating. You can follow us on Twitter, Facebook, LinkedIn as at Coffee Colombiana. I'm Victoria, your host, and you can join us in our next podcast.